Lately, I've been getting a lot of questions in the comments about shorting stocks. Well, this video is for you guys. So in this video, I'm going to go over one of the easier patterns for getting into a short trade, that being the head and shoulders pattern. So I'll go over what the pattern looks like, how to identify it, and then what is the correct entry once you see the pattern, as well as some targets on when to get out of your trade. So if that sounds good, we'll see you after the intro. Alright, so as most of you know from watching my other videos, I don't do a lot of shorting myself. Typically my trades, I'm either buying stock or I'm doing some sort of option trade. But even in my option trades, usually I'm bullish or at least a slightly bullish to neutral type of trade. I very rarely do short trades, and the main reason for that is the market always has an underlying bid. So that's the reason why stocks tend to go up over time. It's really difficult to make money on short trades. You have to have really clean entries, and your time frame has to be really short also. As you'll see even in this example, when you get into a short trade, it's not something you're going to hold for several weeks. You're in and out within a few days. So that's the other reason why I typically don't do shorts. But I will say the head and shoulders pattern is one of the more reliable patterns if you do want to do a short. So let's go over what that is. So here we're looking at the SPY. I'm zoomed out quite a bit because I just want to give you an idea of what to look for prior to the setup even developing. You want to see a stock, or in this case an index, you want to see a chart that is in some sort of an uptrend. So in this chart you can see, ever since this area over here, which was around, I guess February, March, even going into April and May, it was pretty much just in the sideways consolidation. You know, you had these double tops that eventually got broken. And once it broke out above this upper trend line, we really got a nice rally. Now, all rallies eventually come to an end or at least pause or slow down. And that's what we're going to look for in this area right here. So let's zoom in a bit and I'll show you exactly what we're looking at. So as this rally is going up, you can see that at this point here, the stock made a new high and then pulled back down to the 21-day moving average. So at this point, you wouldn't know it, but this is what ends up being the left shoulder of our head and shoulder pattern. Now, like I said, at this point, you wouldn't know it. At this point, the stock is still in an uptrend. So it's just something you want to note that, okay, we made a high, and the high, when you look at it, you can see that it's, I wouldn't quite call it parabolic, but it does increase quite a bit in intensity as it gets up. So that's another thing to look for. So for now, let's just draw a line here indicating that is a higher high compared to all these previous highs. So from there, the stock pulls back, comes down to the 21-day moving average, and again starts to rally. Now, you might ask, well, what about this little pullback over here? Well, this pullback never got lower than this low, and then it continued to rally and broke above this high. So now this level becomes our higher low that we want to watch for. So the stock continues to rally, once again makes a high, and then you see this bearish engulfing candle. Now, this doesn't always happen in a head and shoulder pattern, but in this pattern, you want to look for, again, some type of peak, you know, some kind of high that looks like it's getting reversed. And a bearish engulfing candle is one of those signs. So now at this point, again, all we can do is we can draw a line up here, and all we can say for now is that this is a higher high than this. And then we continue to watch what the stock does. Now we see this time we get a pretty sharp pullback from this high. But the pullback never gets lower than this previous low. So this is still a higher low. And now we created another higher low here. Even though it's just barely higher, it still is a higher low than this previous one. So now one of two things can happen. Either the rally can continue and this can go on to make, you know, new highs, or we can develop this head and shoulders pattern. So as we continue to watch the stock, we see it starts to try to make another high, but it never quite gets back to this previous high. So at this point here, we don't know yet if this is a lower high or if the rally still has legs. We need to watch to see what's going to happen. So we get this little pullback, and even at this point, we still don't know because it hasn't broken this low. So at this point, this is still just another higher low. The stock tries to rally again. This time it fails again. It doesn't even get to this previous high, and then finally breaks down below that low. Once it breaks below this low, now we can officially say that this was a lower high compared to the previous one. So let's just take a step back and look at what we have now. So we have what we called a higher high, another higher high, and then a lower high. So if you imagine this as a head and shoulder, this is the left shoulder, this would be the head, this would be the right shoulder. So now what we need to do is we need to draw a neckline. The way you do that is you connect the low after the left shoulder, so from here, to the low after it made the head, which is right here. And then you want to extend that line out further in time, just so you have something to track. All right, so now we have our head and shoulders, and we have our neckline. So the way to trade this pattern is you want to wait until you see a break of the neckline, and ideally a retest of the neckline from the bottom. So here's what I mean by that. We have the pattern, the pattern completes once we get a break of the neckline. So even up until this day, we can't say that we have a completed head and shoulder pattern. For all we know, this could come back down to the neckline and rally again. Once the neckline is broken, that's when we officially have the head and shoulder pattern. Now, do you want to short it on this day? Usually not. In this case, it probably would have worked out okay. You would have made a few bucks, but this is not the ideal entry for a head and shoulder pattern. And this is where a lot of people get caught. What you want to do is you want to wait for this pullback to stop and ideally see a retest of the neckline from the bottom. And you can see that's exactly what happened here. It almost happened on this rally here, but it didn't quite get high enough. Pulled back again. This probably tricked a lot of people into getting short on this day here, only to get stopped out as the stock rallied up again. So what you want to do is wait. You see there's like what, 1, 2, 3, 4, probably about 6 days here where it tried getting above the neckline and just couldn't do it. Finally, on this day here, it breaks down. It makes a low that's lower than these previous 5 or 6 days. That is your entry point. That is the point now where you can say that the head and shoulder pattern completed, it tests the neckline from the bottom, got rejected, and now the stock's going to continue lower. So what you would do is on this day right here, you would enter your short position, and you would put your stop right above the high from these previous days here. I mean, really you could put it anywhere above the neckline, but I would put it above the wick. And, so around 438.85 is where you would put your stop in case if the stock turns around and rallies and the pattern doesn't continue. All right, so now you're in the trade. You got short here. Anytime you get into a trade, it doesn't matter if it's long or short, you always want to have some type of target on where you're going to get out. Now that target may or may not get hit, or it may even get exceeded. But you want to at least have some type of target so that you have something to look towards and as the stock is moving in that direction. So in this case, there's actually a number of things you can look for. Let me show you the most obvious one first. If you were watching this stock way back here as it was making these tops, you probably would have had these trend lines drawn already as resistance levels. Well, after that breakout, those resistance levels become natural support levels. So once the stock comes back into this area, that's a pretty good place to anticipate a reversal. And we can see that's exactly what happened in this case. Now, the other thing that's really nice about these head and shoulder patterns, there's a way to calculate the expected move once the pattern breaks. And here's how you do it. All right, so what you do is you measure from this low, so basically the low after the head, which is in the middle of the pattern, you measure from there up to where the peak was. And you can see we get right around 25 and a half points from the top of the head down to this pullback. Then from that same location, you measure 25 points down, or you can go 25.6, and that puts you right here at 407.80. So that becomes your target or your expected move if this pattern plays out the way it should. And look how it almost worked out perfectly in this case. So those are your two main ways of deciding when you want to get out of the trade. Now I will say this too. I mean, you can see how quick this was. I mean, this only lasted 1, 2, 3, 4, 5, 6, 7, so only 8 days. So not even 2 weeks. That's the thing about shorts. When you get into this short, you want to look to start taking profits fairly quickly. Even on this little bounce here, I mean, that would have been a good place to take some partial profits, maybe lower your stop down. So now instead of having a possible loss, you at least bring your stop to break even. And just keep looking to take partial profits as this moves down. And once it gets to what your target level is, you really want to take a look for any other signs you see at that location. And so like I mentioned, this was a previous resistance that became support. So that's now you got 2 signs. And your third one is, hopefully you recognize this candle pattern, but these 3 candles are a reversal pattern. Now you might ask, well, how are these 3 different than those 3? Well, what you can notice on this pattern is on this day, it opened high, closed right near the bottom. On this day here, it didn't do that. It actually closed higher than where it opened. The other major difference between these 3 candles and these 3 is that on this pattern here, the close on this day was higher. Well, here, let me zoom in a little more so you can see it easier. So the close on this day was higher than the previous day's high, and it had good volume. On this pattern here, that didn't happen. Although this was a green candle, it got back above the 200-day moving average, and it had a pretty strong close. The close was not higher than the previous day's high. So this is not a true reversal pattern. This is a much more accurate prediction of a reversal pattern. So there you have it. It's really quite simple. It is one of the easier patterns to short. It's pretty easy to identify. You're basically just looking for a higher high, and then a lower high. Connect the lows. That becomes your neckline. And then you just wait. And you wait to see if that neckline gets broken. If it does, don't rush in. Wait for a test of the neckline from the bottom. Once that fails, that's your short. Now you know how to calculate what your expected move is. Continue to move stops lower as the stock continues lower. And also look to the left and look for any structure to the left that would indicate support levels. And finally, once you see a reversal pattern like this, that's your time to get out, because you can see that oftentimes when a stock does reverse, it'll move really fast up against you. And all these profits that you had over this, 8 days, you can lose them very quickly, basically in 4 days. Your profits are pretty much gone, and you're back to even. So again, you really want to keep these trades very short time frame when you're shorting a stock. So hopefully that was helpful. If you do have any questions on this, you can post those down in the comments. And if you're enjoying this content, please hit the like and subscribe buttons, and we'll see you next time.